What's up, everyone? How's it going? Welcome to today's market analysis segment and trade recap episode. Today is December the 1st. Happy December, and we took two trades today. One long, two longs actually. One of them played out, one of them didn't. This one could have likely been avoided, but both realistically it's kind of Monday style plays, so we're gauging the market. But with that being said, this one was really an intuition play. This one was a kind of rubbish play, but I mean, focus mostly on the first part. Second part, we'll look at how we can improve, and likely we could have flipped this as well, depending on what we see on Bookmap. With hindsight, potentially capturing pretty big shorts that are managed well in terms of risk. So, I mean, let's get straight into it, right? So, for those who've watched my pre, hold on. For those who have watched my previous analysis that I uploaded yesterday, our idea was that if we break above this region, it's highly likely that we're going to head up to these highs. On the other hand, if we break below this region, highly likely we go down to this 6720 low. So, um, we honestly just wanted something like that to occur. And this was last Friday, right? So this takeout didn't really count. But with this being there, realistically, we need to break these highs to continue going higher, right? Volume is here, right? So it does provide a good opportunity. Like if we break this imbalance above level, it is likely we're going to head there if we can hold and if buyers are not struggling to hold above it, right? And as you can see, this imbalance above level is standing relatively as a good top for the market for today at least. And it makes sense looking at how volume has projected itself, right? This is where volume is occurring within this imbalance above range, right? So where do market makers, institutions want to transact? Where there's most volume, because they can actually get their big long-term orders filled at this region. Whereas if it's here, price may quickly shoot up or shoot down unless someone defends right around that region. So in this case, we did see some defense at that region, came back into this high volume node, and yeah, we didn't really get any breakout towards the upside or downside like we wanted. We're hovering within the middle of this range, and because we're hovering in the middle of this range, our setups and overall bias is going to be less strong, but still potentially good trades might be made. Now, um, today we did not have much news. We just had ISM manufacturing PMI, I believe, and that was basically the main one at 9 a.m. Central Time, and we simply took a 5-minute interval around it. We had some news at 8:45 as well, but that was like a 2-minute interval, and our first trade actually was at 8:47, and some small light news came out at 45. And perhaps the fundamental side of things also caused this downwards move that we've seen, but you'll see what I'm talking about soon. So, yeah, that's basically the overall bias for the day, right? That's what I was looking for. That's what I was aiming for. NQ, we didn't really mark anything crazy out. We just were looking for essentially the same types of things to occur. As you can see, I would love this like delta profile to show the absorption that we saw up top earlier in the morning at 8:50ish, but um we got clustered by the rest of the day's action, so there's that. But that did provide a good signal for potential reversal that would have, in hindsight, avoided our second trade, taking down our profits from 24, 25 ticks down to around 5 to 6 ticks, which I'm gonna take it. It's not bad, but could have been more, But let's go. It doesn't matter. Also, today's volume and overall volume wasn't bad, I believe, right? Let's see. Yeah, volume wasn't bad at all. Volume was typical, right? But volatility wasn't that crazy. Like previously, you can easily target 40 tick moves, 50 tick moves, even 60 tick moves. Now we're back to that 20 to 30 tick range. And honestly, this could be a beneficial thing as well because now we can be in trades for perhaps a longer amount of time and let the analysis have more time. Like we'll have more time to analyze before we enter a trade. We're in high action, no, fast action. Wait, I don't remember the word for that, but in fast-paced environments like we've been seeing last month, sometimes you need to be really decisive in order to get a good entry. Well, here you can probably get a good entry with a little bit more thinking as well, which could increase win rate. But again, in the discretionary realm of things, discretion is literally the thing. Of course, it's not just discretion, but your discretion and overall expertise on the markets typically is the main factor that provides an edge, if any edge, in the markets, right? Because most strategies, if you systematically test them, some may be profitable, some may not be, and some, if profitable, will not be the S&P 500. So there's that. I have not tested my strategy systematically simply because there's a high discretionary element to it that would essentially be very, very difficult to test unless I literally provide parameters to every sense of thinking that I go through on a day-to-day basis. That being said, I am working on perhaps testing specific order flow mechanism, right? Potential absorption, high delta followed by big selling. What does that? What is the correlation between that and the next, let's say, 15-minute price action, right? Is there evidence and the edge that in the next 15 minutes price will continue to go down? That's the types of things that I'm looking to test, but I still need to learn more Python, more of this, more of that. More work is necessary for me to do that, but we're getting some work done and we're getting some progress done as well. But with that said, let's get back into it. We talked about our bias, right? Want to see breakout? We did it. We're in the middle of this, so we're just playing liquidity on Bookmap, taking some quick intraday scalps, right? Market opened, and honestly, nothing crazy happened. Let me just verify this. Okay, 114. Yeah, that makes sense. Okay. So as you can see, right upon market open, first 5-10 minutes, we've instantly started seeing aggressive buying pressure occur, and on Bookmap we do have key levels above for ES to target, right? We take out this first level, start seeing aggressive selling pressure around 840, 845, right? But if you look on the downside, you don't really have any key level until 6800, so I mean, if we're gonna head down, we're likely heading down to 6800. But then again, there's no reason for me to enter here. Why? Simply because of the fact that there's nothing supporting us or preventing us from heading upwards. Additionally, if you look here, we're starting to see selling delta rise up. Sellers are struggling to bounce at that region. You can see here as well on the delta. What we see is that lots of selling delta near here at these lows, right? We see selling delta, big seller got in here, but these sellers are unable to simply break past these pre-market lows, right? This 825 low. And at 825 low, you can see clear seller absorption. Their big seller got in there as well. We're just unable to break below, and we saw very aggressive buying. So this would be a key area to potentially buy. That being said, Bookmap liquidity doesn't really look the best, so of course there's no entry there. But here actually, right, we start seeing very aggressive buying come in, right? And honestly, that's where I get in longs, right? I'm honestly not even overcomplicating this, right? Where's my take profit? 335. Right, so we see very aggressive buying occur, right? Let's look at the buying delta on here. Pretty aggressive buying imbalances occurring right now, right? We're seeing these buyers splurge very aggressively towards the upside, and on the order book, we're seeing passive buyers follow the market upwards. That gave me a clear signal that price would likely want to head upwards, right? First test, took it, continue head upwards, and continuously buying is following upwards, right? So I'm pretty confident we'll take out 6830 and 6832.5. 6830 would be a good target at first. Of course, like there, you would get a good risk reward, right? At least like 1 to 1.5. But we entered around to 8.5. So literally right around here. We entered at 47. We saw the breakout of first liquidity above. Then we're fighting these two levels, right? We get pretty high up, right? We break both the levels. We don't take profit yet though, right? We break both levels, we didn't take profit. We're still holding because we strongly believe that that 6835 level will be hit, simply looking at the significance of it, right? 6835 psychological level and is pretty significant. We broke 6830 pretty easily and we took out this level too. I would put a pretty high probability that the 6835 region will get taken out. So we're continuing to be in the trade, and as you see, it does happen to get taken out pretty quickly soon after. Now, after this, we continue to pump higher, but honestly, this first trade, it was more of an intuition engaging the market style play than an actual setup. I'm not even gonna lie. This trade, I'm happy that I taken it, and honestly, it's not a bad idea that I took it as well, to an extent. But our intuition was a real reason that this trade succeeded. There was no real full setup that causes trade to succeed, and that's just something to keep in mind, right? Potentially there is some setup that our intuition led us to get in compared to what we have written down, right? So potentially this would be some type of momentum play, and of course that's definitely something to test in the future. But with that being said, let's move on. Alright, so moving on, what we see is gonna be that the highs, we start to see buyer absorption at that region. And I mean, pretty clearly visible on the footprint. Look at it. Where are high volume nodes on both the 8:55 a.m. candle and the 9 a.m. candle? Well, if you take a look at it, a high volume node here and here, right? You got one here and here on this candle. On this candle, we got one here and one here. What do we notice about the ones on the top? Is it predominantly buyers or sellers? As you can see, it's buyers. But if you look at the movement between these two candles, is it predominantly buyers or sellers? Sellers. And you can see that through the delta as well. Both of these candles have 2K buying delta, right? That's a bullish signal. But this candle has closed very aggressively towards the downside. That's showing that there's some factor other than aggressive sellers that is preventing these buyers from heading higher. And there's likely some sort of selling activity going on at this region, which I believe can be shown here on Bookmap. Right, so we head up to this. What's the top level? Right to that 6845 region, right? But we take some of that early liquidity, and then we start heading downwards, right? After seeing that. But the main thing is that buying absorption occurred. Another driver behind the buying absorption might actually be this. Hold on. you look at ISM manufacturing PMI at that time, take a look at what happened to both of them, right? They both did absolute crap compared to the forecast, right? Okay, of course that's not absolute crap, but they didn't do great when when you look at it, right? They didn't do great. The releases were lower than the forecast. Typically, when they're lower than the forecast, that's pretty bearish, especially if it's red like such, right? And I mean, that could definitely be a driver of this 30-minute selling action that we've seen from 9 to 9:30ish, right? Yeah. So again, that's something to keep in mind. That's why it's important to have fundamentals in the back of your head when making decisions as well. But we saw that absorption occurring, and then sellers started to come in. I mean, just take a look at these candles, right? And more interestingly, take a look at the overall delta in these candles. Just these three candles right here, or let's just use these two candles, right? Buying delta, selling closes. Buying delta, selling close. Buying delta, selling close. That means continual absorption of buyers from 9 to 9:20. From 9 to 9:20, buyers are getting absorbed like crazy. Just take a look at that. Absorption, absorption, absorption. Here it's not that visible. Potentially there's some absorption here when we close below, but you could probably scrap this one. Focus on 9 to 9:15. And if you take a look, right after, big pop in selling. But once again, where do we reverse? At that previous area where sellers got absorbed. So you can see how these absorption levels play high impacts of where price is going to go, right? Now, we're so close to the imbalance of below. Of course, I would want to see price head up to that region, but unfortunately, we don't see that occur. Price actually starts to sell off. And why did we take longs here? You might be wondering then, right? Well, price went up, we retraced. Sellers were not coming in aggressively, they were just stalling at this region, right? Or that's how it seemed. But if you look at the order flow, what we see is that selling and buyers and sellers are actively fighting, right? Buyers are struggling to come through, sellers are struggling to come through, but overall, who is winning the battle? Sellers are, right? And we simply wanted to get that nice retracement longs, right? Targeting the upper liquidity around 6845. I mean, it does make sense to an extent, but realistically, we need to put this previous context into place, especially this absorption that happened at the top. There's no sellers getting absorbed here. Why would we enter longs if there's no showing to, if there's nothing telling us that sellers are failing down in this region, right? There's nothing here, right? We already went below that region. Nothing crazy happened. There's nothing confirming that sellers are showing weakness. Rather, we're seeing that buyers are continuously showing weakness. Thus, there's no reason for us to enter long. And realistically, the reason we entered long was because we saw an Instagram story. I'm not even gonna lie. So this one we should not have taken. But after that, we started to see shorts until 9:30. Now, I'm gonna see what happened from 9:30 to 10:30, and looks like buying came back in, right? From this 9:35 region, we started seeing these longs. But honestly, I didn't trade much after that. I didn't trade after that. Why? Well, just taking a look at the liquidity on the market, it seemed quite bare and distributed. We didn't have any crazy imbalances in liquidity distribution, right? Everything, it's like a rectangle, right? We don't really want a rectangle. Or assume it's like a volume profile, right? Imagine it's just volumes like this at every single level. Does that tell you anything? No, that's just telling me the price can do whatever at any level. Similarly, with liquidity on Bookmap, we don't want it to be like this. And that's pretty much how it is right there, right? These 100 and 120-ish, this is 120, right? Yeah, 120. That's not anything significant, right? Especially with like 70. What's 70 times 2? That's 140. 70 times 1.5. That's 105, right? At minimum, I would want to see a 105, but typically we look for more significant ones. I would like to see 150 plus as key liquidity. Earlier in the market, we started seeing 200s occurring more. That provided an edge on the market. These could simply be just market making liquidity, and you can see that it might be the case because look how much it's flicking up here and there, right? If it's real liquidity, it's not going to move around so much. It's going to stay there. And that's why we started ignoring those types of signals. Now that could be considered real liquidity, not here liquidity, but do we think we're going to head down to that region? No. What is that? 7945. After 550 is a big long but once again, we're not seeing any edge from the distribution of liquidity, right? Quite clustered together, and nothing is really providing an edge. There's no spread in liquidity as well. We want significance, imbalance, and spread. And in those conditions, an edge may be there. But right now, it looks to be a lot of statistical noise. Of course, it's not noise, but our strategy we classify as noise because we don't get an edge from this type of data to a certain extent. So I mean, again, that's why we didn't trade, but you can see that price is stalling at this region, right? We're seeing big buyers get in at this region, buying delta here. Buyers are struggling at this region, big selling delta occurring. That's first sign that we may head lower. Next candle, we do head lower. But here we come down to this region and start selling absorption. But at that point, it would be 10:15. So that would essentially conclude the day for us. So I mean, nothing too crazy today. We played off intuition, gained our profit from that, lost a bit of profit based on some Instagram story. Still, we're in profit for the day, 5 to 6 takes. So I'm not complaining. I'm not complaining at all. And with that being said, that's all I have here for today. If you have any questions, feel free to leave a comment down below or join the completely free Discord server, which is linked in the description down below. Additionally, if you want to check out the order flow tools which I'm using, like Addis charts and the Bookmap live streams, those will be linked in the description down below as well. Both have lots of free accessibility, so I definitely recommend you guys to check it out. But as always, do your own research, and yeah, I guess with that being said, I'll hopefully see you guys tomorrow for the next market analysis segment, and hopefully we can crush the month of December. So I guess I'll see you guys tomorrow. Goodbye.